let's talk about some earnings now. Titan reported their numbers yesterday post-market hours. Well, it has been a challenging quarter for the industry, but despite that, the management posted a resilient quarter this time around. So let's welcome S. Subramaniam, the CFO of Titan, to talk about that. Mr. Subramaniam, good morning. As always, it's good to chat with you. I'm going to first start with a segment that has done well this time around, your jewelry segment. I mean, you know, one would have thought that after the absence of the Golden Harvest scheme, with a fall in gold prices, the jewelry segment would have gotten hit. But it's been very resilient this time for you. Do you think this 10% sales growth or volume growth could continue in jewelry, and what's the prognosis going ahead?
Well, I think I should caveat that with one other thing, that while we grew, yes, we did grow above maybe market expectations, but don't forget we also had coin sales this quarter, which was not there in the previous year. So to that extent, without that, I think the growth would be lower. It would be around 3 to 4% as against the 11% that we showed in our overall growth. So I think one has to caveat that as well. Having said that, yes, I think we've done better than what most people expected us to do without the Golden Harvest. Internally, of course, we were slightly disappointed. We thought we could do better, but the season hasn't been great. And yes, the gold prices, which have been lower on an average around 6% plus, has also affected sales to some extent. So we need to wait and see. It's very difficult to give a view on what is going to happen over the next 1 or 2 quarters. But going forward, at least this quarter, we will still get nothing from the Golden Harvest. For that matter, even Q1, we don't see, Q1 of next year, we don't see any benefit of the Golden Harvest coming in. So if anything starts, it starts only in Q2 of next year. So till then, I think we would have muted growth. I think that's going to be a fact.
Okay, that's very candidly put, Mr. Subramaniam. What about, the margins? Will there be some relief at least because of that?
Margins, yes. This coming quarter, we've said that our margins should be looking better. That's largely because of the accounting effect of hedging. If you remember, we were hedging in the international markets, and based on accounting standards, we will have to book them as and when the sale takes place, and that benefit will largely come in this quarter. So you will definitely get a ramp up on the hedging benefits of international hedging in this quarter. To that extent, yes, that will be better. Plus, hopefully we are running the diamond studded activation, which is the promotion which we normally do in this quarter. So the studded ratio, diamond studded ratio, is expected to be better. With that, you will normally also get a better margin. So quarter 4 could have better margins for sure.
Okay. When do you see the volume uptick? You'll wait for the next season itself. What is the ground check telling you?
See, when you look at volume, okay, if we were to take out the effect of the Golden Harvest for a corresponding period last year, I think we are growing quite decently. I don't think there's an issue there. But the fact of the matter is that finally, at the end of the day, how much are we going to earn? So one could state that we advanced our revenues this year in quarter 2 when we did that redemption of the Golden Harvest scheme. We compulsorily had to do that. So one could say that, but the fact is going to be that we are going to have a lower growth in the next 1 or 2 quarters. Yeah.
I wanted to talk a little bit in detail about what the forecast is for the watches segment, Mr. Subramaniam, because this time around your revenues, your volumes, your EBITDA has all fallen in that particular segment. I mean, we could blame it on weak sales during Dussehra and Diwali, but the fact of the matter is companies like yours and many others are getting hit by this online channel sales, and that's going to be a constant problem. So how are you planning to deal with that, and what growth do you expect for watches?
No, you're right about the online e-commerce sale, etc. But I don't think that can be the only reason why we have an impact on our business. It could be one of the factors, but not the only one. If you see the first 2 quarters in our watch business, we grew quite well. It's not that the online e-commerce market was not as aggressive during that period as well. It's just that possibly there are shifts in consumer spending. The general trend in the festival season has been quite low. It's been lukewarm. There could have been some loss of share of wallet for sure into the e-commerce businesses where people might have simply moved categories. So that is something which could have happened, and that is something that we need to be aware of and take into consideration when we do our planning and our promotions. But this quarter we believe we should do much better because we have an activation running, which is our promotion, which happens normally we do it once or twice a year, and that's happening now. So the response has been fairly decent, I should say. So we will wait and see how it pans out by the end of the quarter, but we would think it should be slightly better than how we performed in the last quarter.
Okay. You did mention to Lata that demand trends overall continue to remain very soft. So by which quarter do you expect the demand to pick up, especially in, in overall, not just in the watches segment, but in jewelry as well? And if you could just tell us about, what your product, your new products will look like, anything fresh that you plan to launch to substantiate revenue growth, etc.
Yeah, on the actual consumer spending, we would start. We are hopeful now going forward because interest rates have started reversing, and that is the big factor when it comes to discretionary spend. When EMIs fall, etc., you will have more money in the hands of the customer, and therefore we would start hopefully seeing higher customer discretionary spend. So that is when I think the cycle will change, and of course job creation is going to be always a major factor in this. But importantly, as I said, the salary increases are fairly decent and interest rates start falling, and it's just started. It's 25 basis point reduction, and there is hope that there will be a fairly significant rate reduction over the next 2 to 3 quarters. And when that happens, I think we would start seeing hopefully a better consumer trend. As far as we are concerned in terms of product launches, etc., of course we keep doing what we need to do in terms of new products, create excitement in our categories and so on. One of the focuses in jewelry business clearly has been on the wedding segment. It's an area where we've been very, very weak traditionally, and therefore I think there's a lot of focus on that segment. You might have possibly seen the commercials which will come out now on TV commercials and so on. There are more attractive offers, I can say, in the jewelry, in the wedding segment. So I think that is an area where we will focus possibly quite strongly in the next year plus.
All right, Mr. Subramaniam, just one final macro observation. Your jewelry sales have done badly, but coin sales have picked up. So the Indian hunger for gold has not really ebbed, isn't it, despite the price fall?
No, coin sales normally go with the season. This is the Dhanteras Diwali effect, and it's a gifting season, and therefore it goes up only for that reason. I don't think this is actually for investment as much as it is for gifting.
Fair enough. I'll leave it at that.
And last year we didn't have coins. We didn't have coin sales at all. So the entire thing was a growth this time. That's it.
Oh yes. No, I mean I take that point.
Yeah.
It's just a little disturbing if people are buying coins anyway. But okay, if it's only ceremonial, we will not read too much into it.
Yeah.
Mr. Subramaniam, always a pleasure speaking with you. Thank you very much indeed for joining us.